What's up, team? Sunday night, guys, so you know that means it's time to get prepared for the week ahead. So, a few key things that we're going to run through here, guys. Like we did last weekend. Last weekend's preparation turned into a few great profitable trades. So we're just going to do the same sequence right now. So we'll start over here with the bigger picture view, guys. Major level that I'm focusing on in terms of the SPY is this 260 level right here. We pinpointed this out Friday morning in the live stream, but that's obviously been an important level. Here. 260 has been a key level for the SPY. And with us kind of stalling under that level for the past few days, it's a bit interesting. So again, we don't want to make predictions about what's going to happen next in the market. Rather, we want to put together a game plan so that we're prepared to react regardless of what actually takes place throughout the week. So not saying I want to go short, not saying I want to go long above 260 here, but it's a level to pay attention to. The major observation that I am personally making right now is that we have very low volume. As a matter of fact, here in the SPY, we've had below average volume since the few days after Christmas where this bounce really started. Flip over here to the Qs, guys, and I'm watching a similar level up here, 160, 150, 162-ish, and again, we're still seeing below average volume, way below average volume on the indexes. And when you go back and you look at large market moves, big rallies to the upside like this, those are only sustainable with big spurts of buying power coming in. Most trends that continue on below average volume at some point end up rolling over. Now, I'm not saying that's what's going to happen. I'm not saying we're going back down here to the lows, but by looking at the volume, we can at least honestly say to ourselves that big money is not buying right now. So we really are going to see one of two situations. And again, not prediction. We're just going to wait for things to unfold and react. But one of two things is going to happen here. We're going to get these same buyers that started this bounce. That big money is going to return. We're going to start to see above average volume again. And that's what could push us another leg higher here. But without that big money coming in, it is more and more likely at some point that this bounce off the bottom does see some profit taking and does pull back. So again, the major thing that I would focus on tomorrow is not just these two levels on the Qs and the SPY, but let's also pay close attention to that volume. Are those big buyers coming back, giving us the firepower needed to make a sustained move to the upside, or are we just going to continue to see this weak volume and eventually roll over? So those are two levels on the SPY and the Qs that I'm definitely going to pay attention to. And like we've talked about, guys, you want to have a few setups to the long side and a few setups to the short side on your watch list every single morning. That way, again, you can just react to whatever is happening. You can react to the bigger picture. You patiently wait for the dust to settle, and then you go to those setups on your watch list that are aligned with the overall movement in the market. So I'm going to jump over to Thinkorswim now, and here's a few setups that I'm watching heading into tomorrow. Let's assume that the market is going to roll over. That'll be situation we'll look at first. The market rolls over, those buyers don't come in, and we trade to the downside next week. The major setups that I'm looking at, guys, and these are all on the 4-hour chart. So the first one I'm going to look at here is the SPY. So last weekend we talked about the setup in Facebook here on the 4-hour chart using that 180 SMA. And if you guys didn't see that video, it's on the YouTube channel, it's in the members area. It's the 3 simple setups video. Go check that out so you can figure out a little bit more about this moving average. But the Facebook trade, we talked about that all last weekend, turned into be a nice one. Went long above that moving average and sold for, I think, let me see, I got my numbers right here, a 76% return the next morning. So went long here as it closed above that moving average, and then the next session, we gapped to the upside. I took a nice profit off the table. So preparing, putting together notes, and having a game plan based around setups like this is really helpful, guys. So, like I said, situation 1, the market rolls over on weakness this week. I'll be watching the 4-hour chart using the 180 simple moving average, looking to go short the S&P 500. So again, it all depends on the direction. But if the market does roll to the downside, I'll be looking to buy some puts on a strong break below that level, similar to something that we saw over here and over there. And that's such a simple trade. I know where I want to enter. I know what elements I need to see. A weak market, everything rolling to the downside. And I'm going to buy my puts somewhere underneath that moving average. And then my exit strategy is simple. If it comes against me and it breaks back above that moving average, I'm taking that position off. That's what Facebook was going to be. I went long above the moving average on Facebook, and if it came back here and fell below, well, I would have taken it off. I'm risking a little bit to gain a nice potential move. So that's one setup I'm going to look at here for the SPY. If we do roll over, that's a great low risk, high reward entry point to get yourself a position. And we have the same exact setup for the Qs. Market is weak, we roll over, we can place some puts to the downside as this travels below that moving average. So again, 4-hour chart, 180 simple moving average. Another great setup, if the market shows weakness here, is Google. So Google's in a squeeze on multiple different time frames, and it bounced twice on that moving average over the past few sessions. So, as I said, if the market is weak, if we roll to the downside, great opportunity to get some puts on Google aligned with that nice overall weak move in the market. So we got yourselves Google, we got the SPY, and then for some names kind of off the radar, you can take a look at IBB. Nope, not IBB, I'm sorry, IYR. So the real estate sector, nice strong bounce here off the bottom and having trouble at that moving average. The reason the real estate sector has bounced, as a general statement, is because the whole market is bounced. If the whole market rolls over, as a general statement, everything will roll over. So if we see weakness next week, and this level continues to reject IYR, again, great opportunity to get a solid entry point on some puts. If the trade doesn't work, it's a small, painless loss. If you position size correctly, of course. And if it wins, it's a nice return. So IYR, Google, SPY, and the Qs for short setups. Now, of course, the market could continue its move to the upside. If we do see continued strength into this week, my favorite setup would be NVIDIA for multiple reasons. Two simple reasons. One, NVIDIA is one of the more oversold stocks throughout kind of this market pullback. Take a look at Netflix, that saw some damage. Of course, Apple has seen some damage, but NVIDIA down, almost 50% here. That's a rough hit. So if the market can continue to make a sustained move to the upside, if we see that volume and that strength, I would love to get some calls on NVIDIA somewhere close to that moving average. As long as it continues to trade above and around that moving average, it's a great low risk point to go long. If you can go long somewhere here in the 150 neighborhood, aligned with a general move in the entire market to the upside, it's a very small risk. You're giving yourself about $5 or $6 here to come against you. But if the market is strong, there's no stopping NVIDIA from seeing 160, maybe 170. That's entirely possible. So those are the kinds of things I'm paying attention to heading into tomorrow, guys. Not so much making predictions on what's going to happen in the market, but the way I make my living is being prepared every single morning, regardless of which direction the market is actually going to go. So like I said, tonight, tomorrow morning, put together a watch list with a few good short setups and a few good long setups, and then just patiently wait to see which direction the overall market goes. If it trades to the downside, go visit your short setups. If it trades to the upside on strength, go visit some of those long setups on your watch list. So, quick recap, guys. If the market is strong, we can look to trade NVIDIA above that moving average. And if the market is weak, we can play the SPY, the Qs, Google, which is essentially all the same setup there, as well as the real estate sector to the downside using that same moving average. And for those of you who want to follow along, maybe implement this same kind of setup, on the Thinkorswim platform, you go to Studies, Quick Study, Moving Averages, Simple Moving Average, and then you're going to want to go click on that line, and under Length, you want 180 periods. And I like the little dots. And there you have it, guys. So again, I'm remaining profitable in this volatile environment for a few simple reasons. For one, I'm respecting the big picture. I'm also making sure that any trade I take has a direction of not just the overall market, not just the sector, but also all the individual names in that group as well. I'm truly putting my money to work, long or short, with the wind of the overall market at my back, moving in the same direction. And I'm staying prepared. A few long setups, a few short setups on my watch list allows me to show up every morning hours before the market opens and just simply execute on whatever's given to us. So looking forward to another profitable week and another week to get better, guys. I'll talk to you all tomorrow morning in our chat room and during the live stream.